Good morning, everybody. This is the live market open for Wednesday. As always, Wednesday, January 18th. I'm Yohay, Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. Today we have a busy agenda. As usual, we'll talk about recent developments in markets, cover charts and levels, preview the ECB, which is tomorrow, talk about Trump's inauguration. Yes, this is happening. Trump is entering the White House. Our currency of the week is pound dollar. Of course, after yesterday's big developments. And as usual, we'll wrap it up with the wrap-up and beforehand, the preview for next week's events. So good morning, everybody. Good morning, Ramona. Good morning, everybody else who's here. As always, the most important thing, your questions are always welcome. If you cannot see the chat box alongside the screen, please go to this address, tlk.io/fxrate-live-video. So let's start. The big event yesterday was, of course, the speech by UK Prime Minister Theresa May. She said that the UK will leave the single market, but that Parliament will get to vote, and it'll be a phased deal. So after the pound was hit very hard on Monday morning, yesterday there was a huge short squeeze. We'll talk about that more in detail later on, and of course we'll look at the charts quite soon. The dollar is on the back foot. It was hit first by the Fed minutes, that was already 2 weeks ago, then by Trump last week, this time Wednesday last week, and it remains on the back foot, remains weak. So basically Trump did not talk about infrastructure nor tax cuts, the things that markets want to see, and he did bash some companies, some countries, and he showed that he's more into trade wars. So everything that markets feared of before the elections and forgot about after the elections is now seen. Okay, big events ahead, and these might cause tension and perhaps somewhat lower volatility until they happen. So that's the ECB event tomorrow. We'll preview that, and Trump's inauguration late on Friday, also in one of our previews. Before we move to the charts, let's just catch up on a few data points. Last week, we had mixed U.S. retail sales. Headline was rising 0.6. That was better than expected, but the core missed with 0.2. Consumer confidence came out as expected at 98.1. UK inflation beat expectations with 1.6. Perhaps it added a bit to the pound's rally yesterday, to sterling's shine. And German ZEW beat with 16.6. It did not have an impact. So a few data points, but basically what moves currencies is political news from the UK, from Europe soon, and then, of course, from the United States. So now let's begin with our technical segment. Let's talk about the charts. So this is our focus on major pairs. Okay, technical levels to watch. Beginning, of course, with the world's most popular currency pair, euro-dollar, moving up on the dollar's weakness currently, 106.80. 107.20 was the high seen yesterday, and it is immediate resistance. I would also mention higher above the swing high of 108.60. Okay, that is another high level up there, but we would need a more significant break. To the downside, we have 106.50, 105.20, which supported the pair beforehand. 104.60, I still mention it because this was the multi-year low that held for a long time. Under that, we have, of course, the 103.50 line, which was also important back in 2002. Yes, nearly 15 years ago, when the pair traded at lower ground. So currently, the levels were confined to a narrow range of 106.50 to 107.20. Moving to pound dollar, this chart is already much more exciting. Let's zoom in a bit. Look at this weekend gap. We fell under 120, so the line to watch, the line in the sand on the bottom, is 119.85. Okay, also a bit symbolic because these are the lowest levels. If you exclude the flash crash of October, the lowest levels since 1985. Okay, moving higher, we had a temporary run in this low range, the 120 handle. 120 is the next level to watch. 122, a round number, which provided support, as you can see, just around the turn of the year. It's followed by 123, which worked as a round number, worked in both directions. And the level to watch is yesterday's high, 124.15, actually seen in the Asian session. Above that, if we expect more high volatility in pound dollar, then we have 125.10 to the top side, and then 127.30. Okay, let's move to dollar yen. The weakness of the US dollar is well reflected in this currency pair. So here we are, currently 113.33, support here at 112.50, the level that we've seen the pair bounce at. Further support, we'll need to zoom out a bit before the big dollar rally. So we have 111.40, okay, and then under 110 we have 109.50. Okay, to the top side, levels that we've seen recently, 113.60 and 115, the round number, which provided support earlier in the year. Moving higher, 116, another round number, 117.50, high seen last week, and 118.70, which is the cycle high. Moving to commodity currencies, the dollar CAD, Canadian dollar, taking advantage of stable oil prices, I would not say rising oil prices. And of course, what we're seeing here is the weakness of the US dollar. So currently 130.70, very close to the 130 level, which is of course support. If we look even lower, we'll have to zoom out even more because dollar CAD didn't have such a good run. Well, had a good run, but the Canadian dollar has suffered. So if we look lower, we have 128.30. Okay, so a big gap there between 130 and 128.30, and then 127.70. So these are already older lines. But if we move to the upside, we have recent lines, 130.80, very close to where we're trading. Immediate resistance, 131.80, also 80, 133.20, and 133.80. So I see this 80 as a recurring theme here. The highs of 136 look far away at the moment. Let's talk about the Australian dollar. Quite an impressive recovery, big V-shaped recovery. So we fell to a low. Let's begin from the bottom, 71.60. Moving up, we have 72.50. I think these lines are self-explanatory on the chart. 73.10 was a low back in December and November. Moving up, we have 73.75, which was support in December. 74.50, a recent line of support. 75.20, a high that was already broken, and the recent high of 75.70 is the next line of resistance. Higher, we have 76.50, 77, a round number, and to the top there we have 77.77. Okay, and let's continue with its neighbor, the Kiwi. Also here, more or less a V-shaped recovery from the lows back above the round 70 number. Currently hugging 72.20 resistance for the Kiwi dollar. Higher, we have 72.65, 73.60, and 74.10, which was a swing high up there. To the downside, we have 71.80, very close by, not such a strong line. Further support, much stronger, 71.40, 70.40. Then we have 69.50 under the 70 line. Note that 70, despite being a round number, in this case it is not support. Okay, so 69.50, then 68.20, and very close by 68.50. Okay, so that's the Kiwi, and we'll complete the roundup of major pairs with the Swiss franc. So just above parity at the moment. We're seeing it dangerously reach the parity line, but holding above it at the moment. Parity is of course support here, resistance 100.60, 101.40, and 102.12. Remember that the Swiss National Bank intervenes here below parity. If we have further depreciation of the US dollar, note that 99 level, 98.50, and 98.20. So a zone of support there. But currently the range is 1 to 100.60. Okay, so this concludes our technical levels for major pairs. And now let's talk about the crosses, technical levels for crosses. So we'll begin also with the Swiss franc, where we ended, but this is Euro Swiss. one of the most problematic crosses because the Swiss National Bank intervenes here. So currently we're above the 107 level, which works as support. Further support 106.80. Very, very crowded over there, very choppy. I really don't like this pair. To the top side, we have 107.60, 107.80, and probably the natural zone for the pair that the Swiss National Bank at least wants is 108 to 110. Let's move to a much more interesting cross, Euro Pound. Euro Pound, of course, big roller coaster with the movements in the pound. So 86.76 is the current level. 87.80, which worked as resistance, is now also resistance. 87.70 worked as well, separating ranges, if you can see there on the chart. Okay, let's zoom in. You can see how 87.80 separates ranges, and we have higher above the 88.60 level. To the downside, we have 86, the round number, still relevant, worked as resistance when the pair was trading at lower ground. Support there at 85, of course, a round number, a very round number, followed by 84.50. And then we have 84.20 and 83.30. Lots of movements in Euro Pound. Euro Yen, 121.05. Immediate support there at 121, 120.90, this area, followed by 120.50. Further support, there's already a much bigger gap, 118.50 and 118.20, followed by 116.25. Looking up, we have 121.60, 122.40, which worked as support when the pair was trading at higher levels, and 123.23. And now a much more popular cross, Pound Yen, the Dragon, the Geppy, and we have gaps in the Geppy. 139.50 is the current level, resistance there at 140. 142 is the next level, sorry, 142.10. You can see it was a swing low back, late December. Higher above 145.35 and 146.80. Okay, these are the levels I am watching. To the downside, 139, of course, the round number, or just under 140 at the moment. 138.50 used to work as some kind of resistance line when the pair traded lower. I would still mention it. And much further below, 136.40. Okay, and as usual, we'll complete our roundup of crosses by talking about the world's most popular commodity, WTI crude oil, 52.60 at the moment. Resistance there, 55.20 is the high resistance. Below that, we have 54.50. 52 was a double or even triple top that that oil prices struggled to conquer, and it works now as support. Weaker than it used to be. 49.50 is a strong line of support, followed by 46.50. I think we have some range trading here in WTI crude oil. Okay, so this concludes our roundup of crosses for, before Trump's inauguration. Okay. Now let's move to some upcoming events. There are two big events on the agenda, and we'll preview them separately, but let's just talk about the agenda. First of all, today we have the UK jobs report. Watch out for jobless claims, because these have been on the rise in contradiction to the rest of the trend. We have the final Eurozone CPI numbers at 10 GMT. Probably will confirm that inflation is rising, especially headline inflation fueled by oil. Then we have US inflation at 1:30 GMT. It has been a bit more stable. Let's see if if the stronger US dollar of late has dampened inflation. We also have US industrial output, Trump's beloved manufacturing sector. Let's see how it's doing. A rate decision in Canada, no changes expected from the Bank of Canada. We might hear some worries from there. They would like a weaker exchange rate for the Canadian dollar in order to move away from oil. Even with current oil prices, the situation isn't that positive. For them, they would need much higher oil prices. At 8 GMT, Fed Chair Janet Yellen speaks the second time this week. I'm not sure it's going to be about monetary policy. She might want to keep her cards close to the chest. But anyway, it's a risk event that we should note. Of course, there were comments to be watched are about how the Fed sees fiscal stimulus. She'll probably dodge that, rising inflation, and probably she'll stay on message with 2-3 rate hikes for the year, or not talk at all about interest rates. Tomorrow the big event is the ECB rate decision at 12:45 GMT, and the press conference, of course, even more important, at 1:30 GMT. I'll take this opportunity to invite you all to our live coverage, beginning just before the rate decision itself and running into the beginning of the press conference. Before that, during the night, we have the Australian jobs report, and also worth watching while we focus on Draghi, a bulk of US figures, building permits, housing starts, the Fed Philly manufacturing report, and jobless claims. We will probably see these figures contradicting each other, or not contradicting, but offsetting, and the focus is on Trump anyway in the United States. So lots of figures, but they will really need to go in one direction in order to influence markets. And oil inventories one day later, this time at 4 GMT. But as I said, oil prices have been stabilizing. On Friday, early on Friday, in the middle of the night, here in Europe, Yellen talks once again. We also have Chinese GDP. This is a very important release. Even though it will probably come out exactly as the Chinese government wants it to come out, remember, many people doubt these figures, it still has an impact on markets, especially on the Australian dollar. I think the number that we're expecting is 6.7. At 9:30 GMT, we have retail sales in the UK, another important figure from there. And at 1:30, for those trading the Canadian dollar, we have CPI and retail sales. But the big event of Friday is the ceremony in which Trump enters the White House, becomes the president. Let's see what he does on his first day. We'll have a special preview for that later on. So all in all, a very busy week with Theresa May's Brexit speech, with what we had in what we'll have with Draghi and Trump and other key figures. So now let's begin our previews, our special coverages. Okay. So this is our currency of the week, special pound dollar special. This is Theresa May, UK Prime Minister, yesterday speaking out about Brexit, global Britain. That was the message. And this is what happened with the pound. Of course, you all know it. Weakened gap under 120 and a huge rally afterwards. Currently, we're seeing some profit taking, of course, but anyway, it was a huge move of nearly 3%. So let's just run through what happened. Last week, we had, as usual, the pound suffering from hard Brexit talk, leaving the single market. Then the speech was announced. We learned that she would speak this Tuesday, and the pound went higher on hopes that she would say something positive about staying in the single market, going for a soft Brexit. And then over the weekend, the Sunday Times released the big takes from the speech that May will take the UK out of the single market. Markets open in Asia, pound dollar slipped under 120, and then it shot back up in her speech. Well, the move higher to 121 began before her speech, but basically these are the main things that Theresa May said. First of all, her message was relatively upbeat. She was optimistic about the UK. She was optimistic about how Britain can become global. That was, of course, positive. But two things caught the attention of markets. First of all, that she said that any agreement, any Brexit deal will come to the approval of Parliament, not only the House of Commons, which is, of course, the elected official, but also the House of Lords. And the second thing is that she will steer for an agreement that will be signed relatively quickly, but the implementation will take time, will be in phases, a transitional agreement. And that, of course, makes things more smooth, less uncertainty, and it helps markets. And of course, the third thing that happened yesterday was that we had a short squeeze. After the big fall, some took profit, and this became a cascading event of stop loss points, and that's why you had an exaggerated response. Because if you look now at pound dollar, we're about 80 pips or so below the highs. So we also had a counter effect to that counter effect. But anyway, that's a recap of what happened yesterday. I wanted to talk about it because we don't see such moves every day. It's important to understand the mechanics of markets for future similar events. And now let's talk about pound dollar a bit more in general. So we have more clarity for the Brexit path. Okay, hope that Parliament will soften the deal, hope for a gradual implementation, what I was talking about, and hope for external access to the single market. So Theresa May did say, as expected, that the UK will leave the single market, that Brexit is Brexit, a clear cut, but still some kind of external access. So again, this provides some hope. So that's why the pound went up, of course. On the other hand, well, in addition, moreover, inflation is rising in the UK. We learned that yesterday it came out higher than expected at 1.6. The Bank of England, where we see here a picture of Mark Carney, the governor, they could even raise rates, okay? So maybe we could say the big falls are behind us. Has the pound, have the trade tables turned on the pound? Is everything hunky-dory from now on? In the meantime, the United States, look at Donald Trump. Before Trump, we had the Fed minutes showing that the Fed believed that Trump will really provide some fiscal stimulus, but Trump's press conference a week ago failed to mention stimulus, so the dollar was downed. So all this sends us to a conclusion that pound dollar will rise, right? Well, some caveats, some limits here. Brexit is still Brexit, still loads of uncertainty, still a major change, still worsening of trade relations between the UK and the EU, no matter how you look at it. The Bank of England, despite rising inflation, cannot really raise rates. They don't want to choke the recovery. Much of the inflation comes from external sources, from the weakness of the pound, okay? Watch out for jobless claims. We'll learn about that today. If they continue rising, it's a sign of worry for the UK economy. And watch out for all the political ramifications of Brexit. For instance, a renewal of the talk about Scottish independence, for example, okay? And other issues in the UK, lots of uncertainty over there. So I think it's a big short squeeze. Maybe we'll have pair gain a bit more, but it's not that everything is perfect in the UK and the pound is set to rise against the dollar and against other peers. It's a big bounce from the lows. Maybe we'll not visit 120 anytime soon, but I don't also see the pair going up that far. Now, to conclude this special about the pound after yesterday's events and looking forward, let's look at the pound dollar charts to look at the bigger levels, okay? Let's zoom out a bit. So here we are. Here we are, the bigger scheme of things. Pre-Brexit, we were trading at the 140s, okay? Touched 150 on the night of the EU referendum on June 23rd, when there was hope for Remain victory. And then the big crash. First, we saw the pair trading in a very wide range here between 127.90 to just under 135. Then came the second crash in early October, exacerbated by the flash crash. We fell under 120 very briefly, stabilized there, 121, almost reached the immediate post-Brexit lows of 127.90, but no cigar, and then another fall. If we zoom in a bit, 124.15 was yesterday's high, also a high seen earlier. Further resistance 125.20 and 127.30, and of course the post-Brexit low of 127.90. Looking down, 123, 122, 121.20, and 1985. Okay, 1985. Nice round number to remember. That was the year that pair really traded at these kind of levels. Okay, so big bounce from the lows. You can see that yesterday's move was really quite bigly, as Trump says. But I'm not sure that also, if you look at the technicals, it's hard to say that there is a change of trend right here. Okay. So this concludes our special segment for pound dollar. Okay. And now let's preview the Draghi show. So we have the ECB preview for the first meeting of the European Central Bank for 2017. But before we talk about this meeting, we should remember what happened last time, because last time on the Draghi show, we had lots of things happening. So we had a big announcement in December. QE, the bond buying program of the ECB, was extended. It was expected to end back in March. Well, not back, in March, in 2 months' time. And the end date was pushed back to December, to the end of the year, basically, 9 additional months. However, from April, it will be reduced from 80 billion euros a month to 60 billion. Okay, that's not a tapering, that's a lower scale. Actually, back to the previous scale, the program began with 60 billion. Another big thing that happened is that bond buying rules have been relaxed. And this includes a rule that is relevant to especially German bonds, called Bunds in German, that now the ECB can buy bonds that have a yield not only negative, but below the ECB's negative deposit rate, below minus 0.40. According to reports in markets, Germany, the Bundesbank, which implements these bond buys in Germany, probably bought some already, probably bought some 5-year bonds with yields of under minus 0.40, perhaps minus 0.50. So implementation is already here. And another thing that happened back in December is that the ECB published inflation forecasts, and these remain depressed. So even in 2019, okay, even, well, the end of 2019, that means 3 years from now, they don't expect inflation to exceed 2%. The end result, despite reducing QE from April, is that the euro fell. Okay, this came before the Fed, and euro dollar tumbled. Draghi was dovish and downed the single currency. So what do we expect now? Basically, nothing from Mario Draghi and his friends at Frankfurt at the ECB. But that doesn't mean markets will not move. So no changes in policy is expected. But no change is expected now and for some time. But however, the ECB could respond to rising inflation. Today we'll get the final data. Last week we had the preliminary data. The figures showed, especially in Germany, that inflation is rising. This is a rise in headline inflation because of oil prices, of course, that have stopped falling and began rising just a bit. And also core inflation finally moved up from 0.8 to 0.9. So how will they respond to it? I am expecting a wait-and-see approach. It might be a one-off. It's not a big change. It's not a big turnaround, just a tick up. It could be not a big deal. Another question I'm asking is, will the exchange rate be mentioned? Probably not, but it'll be a big deal. The ECB, Mario Draghi, they prefer the euro to be weaker. This pushes inflation higher and helps exports, stimulates the economy. But unless we reach extremely high levels, the ECB probably will not talk. So they really probably cannot say it at all. Basically, what I'm expecting, well, not such an exciting event. Sorry, like last time. But if Draghi is happy about rising inflation, patting himself on the back, being optimistic in general, the euro could move higher. That means that markets will not expect further stimulus somewhere in the future. Remember, we're not talking about the near future because the ECB did a lot last time. If we'll hear a wait-and-see approach until March, in March they'll just publish new forecasts, then we'll have probably some normal choppiness as we always have around ECB decisions, but no significant moves, okay? No changes in direction, nothing like that. But if you'll totally dismiss inflation, okay, if you'll say that if you'll say that this was a one-off, they're still very worried about growth, worried about Trump or whatever, without saying his name, of course, then the euro could fall. Again, not the biggest ECB decision. We have 8 decisions per year. 4 are accompanied with new forecasts, and usually by some announcements, and 4, like tomorrow's decision, without any specific news. Okay, but don't worry, we'll be there. Valeria Bednarek, Mauricio Carrillo, and myself will cover the event, and of course we'll have the opportunity to talk about many other things happening in markets. All right, you know what, let's look again just at euro dollar before we move on, like we did with the pound at the daily chart to get the bigger picture. Euro dollar fell quite a bit from the highs. This is, of course, what happened on the US election night. Almost touched 113, dropped down, and then further extended its falls with the euro, with the ECB, with the Fed. 103.50 is the top line. The bottom line. 104.60, 105.20, 106.50, 107.20, which was also a line in the past, and 108.70, which separates ranges. So these are the levels to watch at the moment. I don't think we'll have major breakouts with the ECB, but you never know. Draghi has surprised us in the past. And now to another special segment. This is happening. Donald Trump will become the 45th president of the United States of America, enter the White House on Friday, will take the oath of office in the Oval Office. Okay. Remember, the election was a big upset. So, what can we expect? I'll begin by saying I really don't know. Trump has made so many contradictory statements along the campaign trail. He said so many things. He said many things that contradict what his fellow Republicans believe. Okay, so that makes things much more complicated. So it's going to be wild. Tin hat mode, some people call it. I expect lots of volatility, that's for sure. What kind of there are two things that markets focus on. I mean, things that repeated themselves in his rhetoric. Let's start with the bad things they're worried about. So markets are worried about trade wars. He was bashing Mexico with illegal immigrants and car companies, but also other companies moving their factories to Mexico. He was bashing China for being a currency manipulator, although there's a consensus now among economists that the Chinese yuan is actually overvalued, not undervalued. Okay, and they're worried, of course, that less about economics, but politics, but also economics, that there will be less support for NATO, for Europe, and getting too close to Russia. In general, that this could disrupt trade. These worries existed, well, were very strong before the elections, somewhat disappeared after the elections, and now are making a comeback. So that's one aspect, the trade wars, the trade issues. The other aspect is fiscal stimulus. He promised to cut taxes, spend more, not on Obamacare, but on Medicare, at least not cut it, Medicaid for older people, many of them Republican voters, and also to spend more on the military and to spend more on infrastructure, okay? So basically, spend, and cut taxes to stimulate growth. Markets really love that. They were ignoring it before the elections, but after Trump won and the Republicans remained in control, markets focused only on that. Okay, so that's the good thing that could happen for markets from Trump's presidency. But last week he finally made his first press conference after he won. Actually, sorry, the first press conference since the month of July, when he was officially nominated by the convention. And it was a mess. First of all, well, I don't know if you've seen it, he insulted many people, journalists. And for markets, he bashed companies. So the worries about trade wars strengthened. And in addition, there was no mention of fiscal stimulus. That's why we've seen the dollar fall. And in the meantime, the new Congress, new House, new Senate are in session, are in work. It's a fully controlled Republican government. And what they're focusing on is repealing Obamacare. I don't know what they're going to replace it with, but at the moment they're working on repealing that. They're not working on a tax plan, not working on any infrastructure plan. Okay, so that's also a point of worry. So far, Donald disappoints the dollar. Okay, the dollar rallied a lot, the Trump train, and now it's being derailed by the Donald. Let's talk about the inauguration on Friday. So from the time of this show, it's, 3 days to go. The inauguration begins at 5 GMT. That's more or less when European markets close, okay? Many presidents have prepared executive orders, signed executive orders on the first day in office. It includes Obama, it includes everybody. Will we get some planned executive orders in advance? Will they tell us? We're 2-3 days before the event so far. We've heard only general promises about Obamacare and to do many things on day one and afterwards, but we haven't heard of actual executive orders that are prepared for signing. Will Trump talk stimulus in his speech? Remember, there's a big speech there at the Lincoln Memorial when he takes the oath of office, and he might make a special announcement also afterwards from the Oval Office. Will he talk about fiscal stimulus? Will he fix what he wrecked in the press conference? That's an open question. Another open question, will markets have time to react? Okay, so if he makes a big speech at 5 GMT when we have the ceremony, then and he talks also about the economy, markets will surely have time to react, including Forex markets. But if he signs executive orders, it depends on the time. It can be at, I don't know, 8 GMT, for example, US markets will have a narrow chance to react. But if you'll do that afterwards in the US evening, or on Saturday or on Sunday, then markets will be closed. In any case, Monday will be very busy. Even if we have an initial reaction to the ceremony, to initial executive orders on Friday evening, we will have the full analysis of them and more of them, and more action on Monday. So I would recommend against leaving open positions or leaving them with very limited leverage, because we could have a very busy Monday. And again, to conclude, here's Trump with, a sombrero. Markets played down trade wars before after the elections. Markets believed stimulus with the unified government, that Trump, riding on his victory, can pass whatever he wants. But remember, Republicans are a bit reluctant to go for government spending, at least. Maybe tax cutting, yes, but spending less. Question I'm asking myself, are we back to the pre-election state of mind, basically state of fear from Trump? Europe is scared of Trump's Putin romance. Many see Trump as a Putin puppet. Okay, China, the Chinese president Xi Jinping made a speech in Davos yesterday in which he talked in favor of globalization, okay, in favor of free trade. Okay, so the communist country talks about free trade. Anyway, China is ready to retaliate. In any case, for Forex markets, I know most of you, all of you, or refrain from trading the Mexican peso. Watch that space for the biggest action, because so far the Mexican peso has been the most sensitive currency to anything Trump related. That's the Trump trade, and I think it will remain so for quite a while. But in general, I would say that Japanese yen, dollar yen, is the safe haven currency. If Trump's inauguration is scary for markets, watch for a big downfall in dollar yen. If it's very positive, watch for dollar yen to rise. In general, the dollar is set to rise if it's more stimulus, less trade wars, and and will fall if it's more trade wars, less stimulus. Dollar yen is the main currency to trade, and the Mexican peso is sensitive. I would also mention that the Canadian dollar would be sensitive to anything, to both things, because Canada depends a lot on the United States. Okay, let's see if I have anything else to say. Basically, again, it's really, really wild. We will know when it happens. So that concludes our Trump inauguration preview. Now let's preview, as usual, next week's events. So on Monday, no big events are scheduled. I would expect a big reaction to Donald Trump, to everything we talked about, the inauguration, the executive orders signed immediately and during the weekend. We'll have it throughout the week, of course, but on Tuesday we have the Eurozone PMIs, US existing home sales to move euro-dollar just a bit. On Wednesday, it's already a busier day. For those of you trading the Aussie, we have CPI, which is released only once per quarter. In Germany, we have the IFO report. Let's see the mood among German businesses. Oil inventories, as usual on Wednesday, and also CPI in New Zealand. So for those trading the Kiwi, it's also released once per quarter. The bigger economic indicators come closer to the weekend. UK, it's the GDP release. It's the first release for Q4. It will conclude 2016. It's the second quarter after Brexit. I think it will be quite important for the pound. Probably will have an impact for a few days. Also on Thursday, we have US jobless claims, as usual every Thursday, and new home sales, which are more important than existing home sales because creating new homes creates more economic activity. And on Friday, French and Spanish GDP releases. But more importantly, we have the first US GDP release, also concluding Q4, a report card for Obama, if you wish. And we also have with it durable goods report for December that feeds into GDP for Q4, so it'll be less important than usual. And this will also be the time when Trump concludes his first week in office. Maybe we'll have more statements. Maybe markets will scramble to cover some positions. I really don't know in which direction, but I would mention that Trump's first week in office will probably dominate the agenda of the week. So we do have important indicators, GDP in the US and the UK, but Donald Trump, the 45th president of the United States, well, some think he will eventually skip it and won't assume office, but I don't think so. Anyway, his first week in office will be probably quite significant. The world is watching. Okay. So that concludes our preview. And now let's wrap up the show. So this is the wrap up for the live market open, January 18th, 2017. A week that began with Blue Monday. It was what's called continues with storms in markets. In the UK, a big event was that Prime Minister Theresa May said that they will leave the single market, but Parliament will have a vote, and it'll be a phased deal. So the pound, after crashing, jumped back up. Let's see what's next. We had a special segment on that. The dollar was hit again, this time by Trump. Last week's press conference. I really don't know what will happen with the inauguration. We focused on things to watch out for. But anyway, the big things are infrastructure, tax cuts, positive. Trade wars is, of course, negative. Tomorrow we have the ECB rate decision. No big changes expected. But in this preview and in this wrap-up, I would mention shortly that if they're happy about inflation, we could see the euro rising. If they're in a wait and see approach, which is the most likely scenario, we will not have lots of action, just choppiness. And if they're totally dismissing inflation, the euro could fall. And of course, Trump inauguration on Friday. Watch out for last minute scrambling, but we might get the big news only on the weekend. Okay. See here a comment. Trump is more talk than action. He's a marketer. Yeah, he's very good at marketing. Thank you, FX Ambassador. But talk moves markets, especially when you're in the strongest position in the world, the president of the United States of America. So yeah, maybe he might not do anything, and that will also have a big impact on markets. Okay. Another comment here: pound is still bearish, yen is bullish. Yeah. For the pound to fall, you would need, well, first of all, Brexit is still Brexit, still worsening of trade relations, still in the long term not so good for the UK economy, and we're yet to see the impact. And yen is bullish. This depends a lot on Trump. The yen depends less on itself and more on risk on, risk off. If we have bad news from the US, the yen is certainly the currency to watch out for, the currency that could rally hard. Okay, so I do agree, but we have to wait and see for the inauguration. In this wrap up, also let's make a small run on the charts. Euro dollar levels to watch: 107.20, 106.50. It's at the higher end of the current range thanks to US dollar weakness. Pound dollar, after the bigly rally yesterday, now it's taking profit, nearly 100 pips down from the highs, but still much higher. 123, 122, 120, 120 to the top side, 124.15, 125.20. Dollar yen, quite a big fall there. 112.50, further support 111.40, resistance 115, 116. Dollar CAD getting closer to 130, but not going all the way. Below that we have 128.30. To the top side, 130.80, 131.80. Aussie dollar, quite a nice run. Look at how many long days of rallies. 75.70 is the next level, 76.50. To the downside, 75.20, 74.50. Kiwi dollar, hugging the 72 level, 72.20, 72.65. To the top side, 71.80, 71.40 to the downside. Okay. Here we are. So, lots of things to talk about. We've covered a lot of ground. As usual, thank you, FX Street. As usual, you can see everything on FX Street, later on Forex Crunch. This is the full show and all the special segments we had. Okay, should be useful, special preparation for the ECB, for Trump, and our special segment, of course, on the pound. Lots of exciting days in markets, keeping us warm in the winter. Wish everybody a safe and successful day in markets. Do join our live coverage tomorrow. Valery Bednarik, Mauricio Carrillo, and I will cover the ECB. And that's it. So thank you very much, everybody, for coming. Wish everybody success. And bye-bye.